Hey, what's up, everybody? Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist Podcast, where we feature questions from you, the YFP community, to be answered by one of our very own fee-only certified financial planners. Please note this podcast is intended for educational purposes and should not be considered financial or investment advice, as we do not know all the variables to one's personal situation when answering a question. Before we jump into today's question, a shout out to our extraordinary YFP financial planning team that makes this segment possible. Your Financial Pharmacist offers fee-only comprehensive financial planning services that are customized to the pharmacy professional. So whether you want to pay off your student loans, make the right investment decisions, or simply build a solid financial plan, we'll help get your income working for you rather than the other way around. You can learn more by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from Manish in San Francisco, California.
Hi, Tim and team at YFP. My name is Manish, and I'm a pharmacist here in the San Francisco Bay Area. I was starting to look into getting a down payment together for purchasing my first home, and I ran across the option of taking out a 401k loan and repaying yourself, which seemed like a good way of boosting retirement savings and having a bit more liquid cash available at the time of purchase. What are the pros and cons I should be aware of before proceeding with this option? And does it count towards the $19,500 IRS limit on 401k annual contributions? Thanks for any information.
Thank you, Manish, for submitting your question to be featured on this week's Ask a YFP CFP segment of the Your Financial Pharmacist Podcast. Tim Baker, what are your thoughts?
Yeah, so I think there's two ways to look at this. You kind of have the pros and cons of basically borrowing from your 401k versus somewhere else. So, somewhere else in this case might be like a personal loan or something like that. But I think that there's also the pros and cons of just the actual 401k itself and what the effect is on that versus, just kind of letting it be and trying to find alternate resources. So one of the big pros of using the 401k as an access to capital is this money actually, they don't check your credit. There's no loan application. There's nothing that shows up on the credit report. You're basically just paying yourself back with interest. You're not borrowing it from a bank, so there's a lot of hoops to jump through, and you won't pay income tax or a penalty on the withdrawn amount. And it's pretty automatic. So like when you pay it back, they're just taking the money back, through your paycheck, which could be a problem again if you're moving into a house, especially in the Bay Area. I think the cons there are, to me, that the overwhelming thing here is it's time in the market versus time in the market. So many people are like, if I only bought GameStop or if I only did this, and that's just not sustainable over the course of 20 or 30 years. What really makes a successful investment portfolio is just time in the market, staying invested. And when you take money out, you're not doing that. The one thing is that not all 401ks allow you to do this, and there's typically a limit. Now with COVID, I think a lot of those limits have kind of been, I think you can almost take 100% of what's vested, which it used to be 50%. The other big thing is that it could potentially, if you're thinking about potentially moving on from your employer, that could be a thing that you have to figure out what to do to pay that back. But if we kind of take a step back and we say, okay, if you're my client, Manish, and you say like, hey, should I do this? Should I take money from a 401k? Of course, I'm going to say it depends, but I'm going to have you run to ground so many other avenues before we actually do this. So I understand in that California, particularly in San Francisco, is a brutal market. So, if you're looking at a home in the Bay Area, you're probably looking at like a minimum of $1 million from what I understand. So if we say that to get into a home, you need a 20% down payment. Mm-hmm. That's $200K that most people don't have lying around. But then I would challenge you to say, are there other opportunities out there that afford you the ability to get into the home, avoid PMI, private mortgage insurance, without dipping into your 401k? And they're there. We have a partnership with Iberia Bank, which I believe is 3% down for first-time home buyers with no PMI. 3% versus 20%, that's a big deal. You can make the argument now that even if you had the money to avoid PMI, to put down, I don't know if that's the best use of funds if you look at it mathematically. Mm-hmm. So because of just where interest rates are, there are other providers out there. I think someone told me that US Bank does loans for pharmacists, doctor loans for pharmacists in all 50 states. I think there are a few other providers that are out there. So I think that we would basically, and we go through a home purchase worksheet with clients that basically does this by the numbers. So, how much you should be spending, what does that equate to a monthly amount, to a total purchase price? What are the must-haves and nice-to-haves? Working with Nate Hedrick to help you with an agent, do the concierge service, and then really look at finance and option and making sure that you feel comfortable there. So I think all of those things would be the steps A through Z that I would take, and then really trying to figure out, okay, what is available to you? And I wouldn't say use the 401k as a last resource, but it would be towards the bottom of the list. And I think the reason for that to just go back to that is money is fungible, meaning that you can move it from one bucket to another. Even if I say this is my vacation fund, but then I really want to buy X, Y, and Z, I can move that and spend it on X, Y, and Z, and that's okay. But to me, the money that typically goes into those long-term retirement accounts, the play there is for that to just sit there and do its thing and earn its 10% year over year. So it makes the save and investment for retirement that much easier in the long run. If you take the money out and you pay yourself back with interest, that's a linear return on your investment versus I just sat down with a client and I said, your 401k this time last year was $70,000. Now it's $191,000. So it's kind of invisible to you in a lot of ways, but that adds up. And when we're talking about 7-figure pharmacists, not the book, which is a great book, but the concept of having millions of dollars to be able to, achieve your vision of financial freedom, taking the money out of that type of account, it's not catastrophic, but it can cause you to really step back with that regard. So I just think that there's too many other things on the table. Again, Manish, not knowing what your balance sheet looks like to run to ground before you go through that. That would kind of be my 2 cents there.
Yeah, and I think Tim, since you threw in your usual, it depends. I'm going to throw in my usual. Manish's question is another great example of not making any one single financial decision in a silo, and just really taking a step back. And I think our planning team does a great job of this. What else is going on here? We're talking about how it can impact, obviously, the investing plan in terms of that 401k loan, but really taking a step back, say, how does this home purchase fit in the bigger picture of the financial goals and the financial plan that we have set? And then through that framework, make the decision as it relates to the home buy, and then also how you execute that. And I would point our listeners to, you mentioned several of them, Tim, but if our community goes to yourfinancialpharmacist.com, if you click on buy or refi a home, you'll see some great resources there, whether you're looking for a loan, refinancing a mortgage, looking for an agent. You mentioned the relationship with Iberia, as well as Nate Hedrick, the real estate RPH, and some great educational content there as well. So if home buying is on your radar in 2021, make sure to head on over to yourfinancialpharmacist.com and click on buy or refi a home. So Manish, great question. And we appreciate you taking time to submit that to be featured on this week's Ask a YFP CFP segment of the podcast. And as a small thank you, we're going to be sending him a super comfy YFP t-shirt. And if you have a question that we can feature, please go to yourfinancialpharmacist.com/ask YFP or shoot us an email at info@yourfinancialpharmacist.com. Have a great rest of your week.